Donald Trump's White House return could spark mortgage misery in UK. Hello everyone, welcome to my channel. I hope everyone is having a wonderful day. Before starting the video, please hit the subscribe. Now this start video. The money paid by the UK government for its own borrowing is getting more expensive as Donald Trump's return to the White House looms. Donald Trump's election could lead to a spike in mortgage rates, an expert has warned. In the days before and just after Trump's win in November, gilt yields, in both the UK and the US, rose. 2 days before Trump was elected, Reuters reported that the 5-year gilt yield rose 11 basis points on the day to an annual peak of 4.449%. Gilt yields have continued to rise, and Reuters reported that 30-year gilts are now paying out 5.198% compared to 4.747%. But one expert said the reason for the latest rise is further away from Westminster, as the world's financial centers brace themselves for Donald Trump's first few weeks as US president. Richard Carter, head of fixed interest at Quilter Cheviot, said, "Gilt yields have surged sharply in recent weeks, which is bad news for the government as it stokes fears about the state of public finances." This spike can be partly attributed to Donald Trump's victory in the US presidential election, as his policies on tax and immigration are expected to drive inflation, leading to rising yields in the US and consequently in the UK as well. The rise in yields means UK long-term borrowing costs have hit a 27-year high, but gilt yields can fluctuate. Gilt yields also influence swap rates, which are a money market mechanism used by mortgage lenders to decide how much they can afford to lend at fixed rates for. Other factors may also influence borrowing. For example, bond prices fell, pushing up yields, after the Chancellor Rachel Reeves delivered her first budget in October last year. Her higher-than-expected government spending and a jump in borrowing which surpassed the PS40 bond she outlined in tax increases sent the 5-year gilt up to peak of 4.449%. A rise in government borrowing may also mean the Bank of England holds off on any more cuts to the base rate. The UK government is having to pay more interest on its borrowing as it attempts to lure investors to buy bonds, which are also known as gilts. Bonds are issued by the UK government to raise money to fund infrastructure projects and spending on public services. Reuters reported that Britain's latest auction of 30-year government debt received the lowest demand since December 2023. Yields on shorter-term debt also were up this morning, including 2-year, 5-year and 10-year gilts, Reuters reports. Carter added, "The Bank of England remains cautious about slashing interest rates too aggressively, and the tepid demand from investors at the latest gilt sale underscores the uncertainty in the market. The short-term outlook is particularly unpredictable as we approach Trump's inauguration, adding to the volatility." Despite this turbulence, gilt yields still present an attractive opportunity for long-term investors. Currently, they are well above expected inflation levels, making them a viable option for those looking to secure returns in a sluggish economy that might prompt further rate cuts by the Bank of England. For investors with a lower risk appetite, short-dated gilts still offer a promising avenue and are less sensitive to market fluctuations. The government's rising borrowing costs are an attempt to lure investors to purchase gilts, which are bonds issued by the UK government to fund infrastructure projects and public services. But the reality is that the demand for these bonds has been sluggish. According to Reuters, Britain's most recent auction of 30-year government debt received the lowest demand since December 2023. This lack of interest from investors further complicates the financial situation, as the UK government struggles to attract the necessary capital to fund its activities. Looking ahead, Carter expressed caution about the short-term outlook for the UK economy. The Bank of England remains cautious about slashing interest rates too aggressively, and the tepid demand from investors at the latest gilt sale underscores the uncertainty in the market. The short-term outlook is particularly unpredictable as we approach Trump's inauguration, adding to the volatility. So, what does this mean for you, the average UK consumer? For long-term investors, the rise in gilt yields could present an opportunity. As Carter pointed out, despite the turbulence in the market, gilts still offer returns that are well above expected inflation levels. For those with a lower risk appetite, short-dated gilts may provide a more stable investment option, as they are less sensitive to fluctuations in the market.